The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern time. We get the markets right now. We'll call them mixed, folks. You got the S&Ps negative by 3 points. You zoom in on the action. Quite a day yesterday, man. You trade higher on a little bit of a soft CPI number. You get up to 44.60. You really get up to an intraday high at 9:45 a.m. Just when I was on the program, things looked pretty good yesterday when I got off the air at 10 o'clock, but not so much the case, man, as the final 6 hours of the trading day, pretty much all negative territory, trading into the low. You traded from 44.66. You basically trade down 90 S&P points throughout the day from that price point, time point, 43.75 overnight. You make it up overnight, 43.75 at the close. I'll get it overnight. You make it up to almost 44.30, and just like that, we sell off a bit, starting at about 7:15 a.m. this morning. You trade from 44.20. We're down 30 S&P points from that price level, and boy, you're talking about right near the lows of yesterday coming into the open. We got some PPI data. We'll get into that in a moment. We jump to the NASDAQ 100. NASDAQ 100 in positive territory by 7 points this morning, but you talk about a drop-off. Almost 400 points from where we were 10 a.m. when I got off the program yesterday, trading at 14,278. And yeah, you trade down to 13,881 at the close. And don't get too distracted by the drift up overnight, because basically the market gives it almost all back. We're trading 13,948. You get the Dow negative by 60 points. Russell positive by 3. Crude back above $100. How about crude? Crude's up $10 from where we were Monday, folks. We talked to our man Teddy Kegstad at 40 past the hour. Always an interesting conversation. We'll talk a little bit of Forex. We'll talk a little bit of commodities. Crude always comes up as well. Gold contract up $3 this morning at $19.71. Look at that rise in gold from last week at $19.16. This is just a 5-day chart, 15-minute bars. Hit 1984 this morning. We're trading at 1978 in the price of gold this morning. You pull up a daily on the price of the gold contract. Zoom in on the action here. From the lows of February of about 1785, we make it up to 2078 on March 8th. We pull back to the 50% line, and just like that, gold looks to be rising yet again, 1978. Again, we'll talk to Teddy about the yen, always an interesting component of the influence on that gold contract. We'll check that out at 40 past as well. We jump over to the VIX. Volatility index this morning, 2439, a far cry from where we were earlier this month, where we were flirting at 18 and change. 19 was the lows. The VIX seems to be on the rise yet again. All right, let's jump around to some of the headlines. We got JP Morgan earnings. We got Bed Bath & Beyond earnings. But before we do that, PPI, 11.2% from a year ago, most on record. Now, records for the PPI only go back to 2010. What's up with that, first of all? But nonetheless, topping all estimates, underscoring persistent early-stage inflationary pressures that risk feeding through to consumers. Excuse me, folks. Still just battling getting over this cold a little bit. Producer price index for final demand increased 11.2% from March of last year and 1.4% from the prior month. We talked to our man Kevin Hincks coming up after the break at 9:15. He always says it, and folks, right now, pay attention to the monthly numbers, okay? He made a great point. We know 11 out of the 12-month component coming into this yearly number. The only number we don't know is that number coming in, okay? You take this number, you add it to the other 11 months, you get this number. 1.4% from the prior month. And when you look at the expectations, far exceeded expectations. Expectations were only 10.6% year over year and 1.1% on a monthly advance. On a core component, 1% was the number on a month and 9.2% on a headline from a yearly basis. Pretty much status quo. Inflation is here, folks. Not going to really change anything just on these numbers. As I've been talking about, the next 3 months, maybe the next 6 months, be interesting to see where these numbers go, because guess what? The market knows inflation is out of control. The Fed is going to be coming with 50 basis points. That's my expectation. That's the market's expectation. It would be a big surprise if that does not happen at their next meeting. Especially as we get continued elevated levels, CPI, PPI, etc. Producer prices excluding food, energy, and trade services, which strips out the most volatile components, rose 0.9% from February, the biggest gain since the start of last year. The measure rose 7% from a year ago. It was pretty broad here. Cost of processed goods for intermediate demand, which reflect prices earlier in the production pipeline, increased 2.1% from a month earlier. More than 60% of the broad advance was due to energy, though, particularly jet fuel. So keep that one in mind as you see some pretty staggering numbers when you talk about processed goods, intermediate demand, 2.1% on a monthly basis, but more than half of that coming from jet fuel. That's where PPI will differ sometimes from the CPI, where you're seeing some influences that might not necessarily translate over the consumer side of inflation. Okay, now let's get into the bank earnings, man. I'm going to jump to the charts. Not good earnings, okay, to kick off bank earnings. JP Morgan comes into their numbers at 131. We got a low recently on March 8th of 127.27. We back it up on a 3-year weekly just to see the chart of where we are right now. You're going to open, folks, at 127 and change. I mean, you're talking about the lows of last year, 127.35. We're a hair above that low right now, and you're talking about the lows of March, 127.27. We were flirting below that level at one point. Even look at the lows prior to COVID, 129.71. You're going to be below that level in terms of where we came in, and there is your action. You actually spiked down to 126.27. We had a conference call began about 40 minutes ago with Mr. Diamond. You're up a bit. But getting into the numbers, JP Morgan, how about over a $500 million loss tied to Ukraine? Fixed income trading revenue crushes estimates by $1 billion. Excuse me. But first quarter results marred by over $500 million loss tied to market fallout from Russia's invasion of Ukraine. The loss was driven by funding spread widening, as well as a credit valuation adjustments relating to both increase in commodities exposure and markdowns of derivatives receivables from Russia-associated counterparties. Yeah, pay attention to that one as the banks get ready. $902 million net reserve build. Okay, so they're building the reserves here, driven by increasing the probability of downside risk due to high inflation in the war in Ukraine, as well as accounting for Russia-associated exposure. The increase marks the first time since 2020 that they built up its pile of money set aside for potential credit losses. Now, trading revenue. Fixed income traders pulled in $5.7 billion in the first 3 months of the year, crushing estimates by $1 billion. Equity traders, $3.1 billion in revenue in the quarter. I mean, think about it, folks. 3.1 plus 5.7, you're talking about $8.8 billion in 90 days. That's about $100 million a day in trading revenue. Firms trading revenue down 10% from a year earlier as of March. Things have changed a lot. Investment banking revenue, though, fell to $2.1 billion, lower than the 2.3. So total loans rose 6%. We'll talk a little bit more about this, but nonetheless, the market is hitting it, folks. JP Morgan lower, all the banks lower this morning. We'll jump around. There's Bank of America down $1 right now. Goldman Sachs down $5 right now as well. Stay tuned, folks. Be right back with our man Kevin Hincks from TD Ameritrade Network. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now, negative by 2. We got the NASDAQ 100 barely positive by 15, Dow negative by 47. All the markets pretty mixed as we wait for the opening bell. Jumping back to that PPI number, just taking a look on a chart of where we are. Interesting chart here when you take a look on the Bloomberg article I'm checking out here. Producer price index year over year on the top and month over month on the bottom. It is remarkable, folks, where things have been in the last year. You back things up a year ago, 2021. It is absolutely remarkable that nobody saw this coming. Seems too easy, right? Sometimes it is too easy in hindsight. Okay, pay attention to this number, though, folks. Things are going up on the PPI basis. That is not what you want to see in terms of waning influences of supply chain woes. But boy, you take a look at that, and I got that one because pretty interesting when you take a look at the front page of Bloomberg. I mean, you take a look at this chart, folks. That is accelerating in a big way. Headline number 11%. U.S. PPI year over year, and it is just ramping up, man. And talk about an acceleration from where we were just about over a year ago. All right. Let me back this back out so we're not too zoomed in. We jump back to J.P. Morgan here. So real quick, talking about net interest income and total loans for J.P. Morgan as they come out, as they lead off the banks here. Total loans at the end of first quarter rose 6% from a year earlier. Commercial loans up 10%. Credit card loans 15% higher. Consumer loans, excluding credit cards, down 4%. Loan growth key focus for investors looking for signs of a rebound after lending slowdown tied to pandemic-era stimulus. The firm raising their net interest income outlook $53 billion or more, up from roughly $50 billion in January. As I said, they kick it off in terms of the banks, and as we look at who they got coming up, Thursday, we got Citigroup, Goldman, Morgan Stanley, Wells Fargo, and Bank of America comes out on Monday. They're the only one a little bit delayed. But all the banks trading lower, as you'd expect. We'll jump to Morgan Stanley. They're down a couple bucks to 82.58 right now. We jump, as I said, Bank of America on Monday. There's a little bit of an acceleration, to say the least, down to 38.50. Interesting to see how they will trade coming out of the open this morning with a little bit of a miss from J.P. Morgan. All right, folks, let's jump over to our man Kevin Hincks. Every trading day, 12 noon Eastern time, folks. Fast Market on the TD Ameritrade Network. Your host, Kevin Hincks, Tom White, They break down the day's market action, walk you through hypothetical trade setups, folks. It's earnings season. It's starting right now. We got J.P. Morgan kicking it off this morning. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, we made it. We made it to first quarter earnings season, finally. And so J.P. Morgan, Delta Airlines have started us out. J.P. Morgan, very cautious in some of their reports after earnings, but Delta Airlines, a glowing look at the U.S. economy and how strong their numbers were in their bookings. So a little bit of a mixed bag. I think J.P. Morgan, Jamie Dimon showing a little more of the risk that's in the overall economy right now, both with supply chain and Ukraine, the overall risks in the market that are out there. But Delta showing that the U.S. consumer wants to travel, Tommy, and they said their bookings, their CEO came on this morning and said they've never seen bookings like they have right now. So pretty strong out of start to earnings season out of airlines, but not so much out of banks, Tommy. Of course. So when we look at the inflation data that came out today, like producer price index, right? What people might be shocked about, Tommy, is that this number came out much more hot, much more warm than the CPI number did. But here's the thing. I compare it to getting hit in the stomach with a baseball bat like CPI or PPI hitting you in the stomach with a feather. It's just not the same effect on the overall market that you might think. In terms of the four looks at inflation over the month, we get the wages part of non-farm payrolls, we get CPI, we get the PCE data in personal income and outlays, and then we get PPI. And PPI, Tommy, as you know, is a distant fourth in terms of looking at inflation. So even though this number was hotter than the CPI data, it is certainly not having the same market effect that it did. So certainly something to look at and not overreact to when you look at the PPI data. We had a calm mortgage apps number, right? We actually had purchases up 1%, so you're getting a little more calmness in mortgages. But all things considered, we're looking at the earnings that came out today. We're looking at the economic data that didn't have much of an effect, and now we're looking for big earnings tomorrow morning out of Goldman Sachs, Wells Fargo, Citigroup, and Morgan Stanley, Tommy. So as we get to these numbers, it's important to understand what makes good earnings, what makes bad earnings in these things. Like, case in point, everyone thinks because the 10-year yield is higher, it should benefit banks, and it does, but it benefits some differently, right? The two banks that will benefit most from net interest margin, right, higher yield, is Wells Fargo and Bank of America. J.P. Morgan a little bit less. J.P. Morgan, their CEO, Jamie Dimon, was very forward-looking in terms of overall risk. They put money aside for risk, as Jamie Dimon has been known to do. So a lot of good things going on. Jamie Dimon taking care of risk. I think the 127 level in J.P. Morgan is very important. So a lot of good things to look at this morning, Tommy. Now, looking at the market as we get it today, you're still focusing on financials with the four coming out with earnings before. We're starting earnings season, but we're really only touching, right? Delta Airlines was a good number. They came out with some great data on the overall U.S. economy. J.P. Morgan, though, was positive on the U.S. economy. They were certainly cognizant of the overall risks in terms they had a little bit of exposure into Russia and Ukraine, so they had to account for that. But I think if you look at the chart of JP Morgan and where the key numbers are. This 127 level where we find ourselves right now, JP Morgan, pretty significant technical level for that stock. So I would expect this, to trade around this level. It'll certainly test, but watch JP Morgan around the 127 level. I think that is where this stock should look
Hincks.
to firm up. So
can you hear me, brother?
That is the way I look at this. Hello?
Kevin Hincks, you got me?
I got you, Tommy.
You're the man. I love it. I got kicked off the air. I come back, and I get to hear the whole wrap-up from our man Kevin Hincks filling in for me. I love it, man. Thank you so much. My 1-year-old's running around the living room, Kevin. He's ripping out wires out of the internet. I can't stop him. He's so crazy out there. But I'm back on the air. We got 30 seconds, man. I don't know if you said it because I missed it, but what are you guys talking about on the show today, Kevin?
We'll look at Wells Fargo and Goldman Sachs today. We'll cover those two banks. And then Zoom video. We'll look at, like Folio, do a presentation on Zoom video, Tommy.
I love it, man. I got JP Morgan up at that chart. Some great points. I caught the end of it. 127, man. Kevin, thank you so much, man. And we'll talk to you tomorrow. We'll be watching the show today at 12, man.
Have a great day, Tommy.
You too, Kevin. I'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Thanks to our man Kevin Hincks for jumping in there. Inopportune time to lose my internet right as I could hear his voice coming on for that segment, folks. Boom, my internet goes out, and little Tommy the fourth running around out there in the living room, man. No matter how much you try and corral him, folks, it's difficult if you know what 1-year-olds are like. And yeah, he was able to make it to the router and reset things. It takes about 5 minutes for the internet to reset, so I was fresh out of luck. But our man Kevin Hincks filling in, and I caught the end of it. Some great analysis there, and we'll see how JP Morgan trades coming out of the open. You're down 3.75% right now. You're trading at 126.53, and on the Thinkorswim platform, as Kevin was talking about, you take a look at where we are. Now, you're below the lows that we had from March 8th, but you do back things up on a 3-year weekly, and you see you have an area that we had some support back in the early part of 2021 before it really traded higher. You're also back to an area that had support prior to COVID, which is remarkable. And backing things up, even further on a 5-year weekly, you can see this area that we're back to in the beginning of 2021. What I will say is 120 is totally possible as well, because that would bring you back to the highs of 2018. We're only $7 away, which is remarkable. But look at this, just like that. Somebody's buying. A little bit of a pop there on the open from 126, and just like that, we're trading at 127.50. JP Morgan still down about 3% right now on their numbers. We jump over to Bed Bath & Beyond, down 12% on their numbers. Now, this one's going to be interesting. I was listening to Bloomberg early this morning, and they were talking about saying, where's my Bed Bath & Beyond? Come on. I know I got you up here. Maybe I don't. I thought I did. Oh, shame on me. I got to get it up. Maybe I closed the article. Nonetheless, they're blaming supply chain issues, right, in a big way. What's going to be interesting to see here is that when can the market figure out whether something is industry-wide or the company is failing to execute themselves? And you're going to hear a lot of companies blaming supply chain issues, getting products to the floor, etc. Bed Bath & Beyond struggling. You're down 12%, and it has not been rosy times for Bed Bath & Beyond. Now, this stock is a Reddit stock phenomenon, but look where we're talking about here. We're pushing really basically near the lows that we've had since all of this started. If you recall, now, it was down to 343 at the bottom of COVID. Things really started to accelerate in September of 2020. Okay, we're going backing up a year and a half ago where things started to get out of whack. 53.90 was early 2021. You see the spikes in here, but boy, we're coming right back down to some dicey areas for Bed Bath & Beyond. You're down 12% right now, and be careful of that one, folks, because it's a tough business, man, that they're competing in. I'm not sure that they serve a role that is necessary in the commerce that takes place, as in anything you can find at Bed Bath & Beyond. If you want to go online, you can find it at Amazon. If you want to go to Walmart, you can find some of the stuff there for the cheapest prices. If you like going to Target, a lot of what they have probably is at Target as well. You get the point, right? If you're not serving a great enough niche in a section of the commerce that's taking place, and to prove the point, there's your monthly, okay? Yeah, that I would be wary from in a big way. This stock's been in trouble since 2017, and I'm not sure they've turned the corner in finding a role of where they fit in just yet. All right, it's a big day, folks, because our man Basil Chapman, he is coming up next with the Tiger Technicians Hour. But tonight, folks, Basil Chapman, opening call subscriber webinar. Head on over to the front page of TFNN. Folks, it only takes a few minutes to sign up. It comes with a 30-day money-back guarantee. If you have not signed up for the opening call yet, today's a great day to do it. Head on over to the front page of TFNN. You can sign up for the opening call. You can sign up for a month, 6 months, a year. All of them come with a 30-day money-back guarantee. If you're thinking about staying on, I encourage you to think about signing up for the 6 month or the year. You add 22% or 33% savings versus the monthly rate. You still get a 30-day money-back guarantee. And Basil is going to be in there for 90 minutes tonight, right at the end of my dad's show at 4 o'clock, 4 till 5:30 p.m. Eastern time. It should be a cool one, folks. With higher interest rates, soaring commodities, and warring nations, are there enough influences on this market for volatility right now? Is it possible for the stock market to make new all-time highs in 2022? Basil's got a couple of points that are going to guide him for the 90 minutes. If you are a subscriber, folks, if you do sign up, you can email Basil any questions prior to the webinar, basilchapman@tfnn.com. And the cool part is this is going to be the first live webinar that we're doing at our Discord server. Now, our Discord server is what we're hosting the new Tiger's Den on, all right? We've been talking about that a lot. You can join that as well for $1. If you do subscribe to any of the newsletters, folks, though, you get in free. Now, for you current opening call subscribers out there, okay, we still have some of you out there that have yet to join the Den. I encourage you to do it. We've sent out emails, all right? Very simple to do. You download the Discord app. You create an account, which is free. You email us your username, and we get you in the room. It's just that simple. You do need to get into the room, folks, to attend this live. And what I will say is please do not wait until 4 o'clock, okay? Jacob's going to be doing a great job, as he has been, getting this entire room together. Outstanding job by Jacob. I'm going to be helping out at 4 o'clock as well. But the bottom line, folks, is if we got, 10, 20 people that come in at 4 o'clock and say, I just signed up or I need help right now, we don't have a floor full of customer service reps that are going to be able to help everybody at 4 o'clock. That will be difficult. We're going to send out another email right now. But just get in there early. Check it out. If you have any problems, we can get you in there in a few minutes, folks. It's very simple. We just can't help everybody right at 4 o'clock. So please don't wait till the end. Sign up now. Get in there, get in Discord, get in the Tiger's Den. Folks, we got 90 members live right now, trading, chatting, talking about trading ideas in the Tiger's Den right now. It's live by about 7 in the morning, folks, all right? You can use it on your mobile, your tablet. That's the coolest part about this. Hotcom was a great piece of software, and it just couldn't keep up with technology, folks. Tonight, you can be sitting on your couch with your tablet in Discord watching our man Basil Chapman from 4 till 5:30. You can be on your desktop. You can be on your mobile phone. It's going to be an awesome webinar, 4 till 5:30. Basil always does an outstanding job for his subscribers, and this will be archived, folks, if you can't attend live. So that's coming up at 4 o'clock today. Last chance, check it out, 30-day money-back guarantee. I'll be in there tonight to see whether Mr. Basil Chapman thinks what's the possibility of new all-time highs in 2022. We had quite a run-up in these markets, man, when you look at where we were. Now, that's a monthly. You talk about a chart, man. Let's put it back on a daily. Quite the run-up from where we were on the lows of March 15th to the run-up we had on March 29th. Not many people would have thought that the S&Ps would have been within 200 points of all-time highs back on March 15th, folks. That's when Basil started putting this webinar together. Okay, we were talking about it in March. We launched it towards the end of March. It's April 13th. There's been so much market volatility. I can't wait to hear what Basil has to say. He's coming up at 4 o'clock today, folks. Check it out. All right, let's jump around to see what else I have pulled up. Delta. So Delta forecasts a quarterly profit as travelers keep flying despite higher fares, helping offset surging fuel cost. First quarter fuel bill, 6% rise from 2019 to $2.09 billion, even though its capacity was down 17%. All right, they're forecasting second quarter capacity at 84% of 2019 levels. That's not that bad when you think about the impact that business travel has had. You're at 84% of 2019 levels, and business travel, it's got to be well off where you were in 2019, folks. That has changed forever. It's coming back. Boy, I can't wait to go to like some good trade shows. Maybe I'll make it to the Traders Expo in New York or Vegas just to get out and see some people again. Stay tuned, folks. We're going to be coming back. We'll talk some Forex with our man Teddy Hincks. Forex-trading-unlock.com.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And before I jump to our man Teddy, I got our man Basil in here, folks, and he's telling me, okay, I encourage you to sign up, folks. This is going to be a good one tonight at 4 o'clock. They're going to be looking at stocks tonight with our man Basil Chapman and sectors that are going to be important, as well as chart patterns that will become more and more important in the coming weeks. Basil said, hey, let them know. We're going to be talking about stocks. We're going to be talking about sectors, and we're going to be talking about the charting patterns that are going to become very important in the coming weeks. Let them know, because that's what's happening 4 o'clock tonight, folks. Check it out. And with that, let's jump to our man Teddy Kegstad, folks. You can reach Teddy every trading day at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. Mark that one on your calendar so you can tune in every week. Teddy Kegstad, what's going on, man?
Morning, Tommy. We got a short holiday week this week. I bet you want to talk about the yen, huh?
You know what, man? I almost just let off with it, and I said, we'll just see where we go. But I got it up on my chart to begin with, man. You were talking about being a bull, Teddy, even with Japan over there saying, hold on, we're going to put a cap, but let's kick it off, man, because it's been quite a run in the yen. I got it up here on a daily basis, trading at 125.68 right now. Talk to us, man. What's going on?
Well, we had a higher move high today. I think the high it was 126.30 something, 31,
yeah,
32.
Yep, 126.31, sure, yep.
Now, right now, the yen is just getting devalued versus most of the currencies out there, especially all the strong ones, you know. So it's not just the dollar, the pound yen, the Aussie yen, they're all like pushing highs. The U.S. dollar yen, though, is the one that is the strongest one that's impacting the yen. And now we know there's a line in the sand at 130. I think no matter what, you have to be very careful right now trying to sell into this move. I think we're going to definitely start to push up to that upper 128.29 area over the next, well, everything is so accelerated. We blew through I thought we would hit 122 and then 120, a higher target over to not for another couple weeks yet. So right now, this is so accelerated with the momentum that you gotta ride this, and I think it's going to continue. So I'd be very cautious. I think you're going to see a lot of swings. We had a big sell-off last Monday that really pounded the yen for a while, or gave strength to the yen, excuse me. But it didn't hold up. The news is out there. The market doesn't seem to care. And the reality is, if you look at the 10-year and the 30-year notes, they are coming off new move lows again from this week. So and that strength in the interest rate factor until the Bank of Japan does pull the trigger is definitely going to be an issue as far as the driving force for momentum to the upside for the U.S. dollar strength and other currencies against the yen.
Yeah, it's pretty remarkable that it's just been so strong in light of a cap that as a trader, you think, okay, I got a cap, my risk reward potential, where are we going? But nonetheless, man, you can see that it's just strong, man. Going back, Teddy, pretty remarkable. Since March 7th, outside of those 3 bars on that initial pullback that it had from March 29th, I only got 1 or 2 other red bars. And you're talking about, 6 weeks of action, trading from 115 to 125. Like you say, just everything moving so fast in this market right now.
And we were sideways for 4 months before that. We were in a range trade. We were inching higher, but for the most part, it would make new highs and then correct back off of it really quickly. Sure. We're not seeing that type of activity right now.
Yeah, on a weekly basis, man, the chart's just bonkers in terms of the last 6 weeks, just straight up in one way. Where else do we go, Teddy? What else is on your radar for what's moving this week?
Well, I would say use caution. We have Good Friday coming up, so no matter what, you're going to see the market start to close globally going into Thursday into Friday's trade. Anything that is open on Friday is going to be very, very illiquid, so it's always a bad. You know why the stock market is closed on Good Friday? It has nothing to do with a religious thing, but twice the U.S. stock market was opened on Good Friday, and both times there was a crash. So the markets don't like Good Friday. So I don't know if it's a God thing or not a God thing. Whatever it is, it's
so they said, let's just close it.
Bad juju, yeah. So if you're not in a position going into this weekend, wait until Monday. That's my biggest point, So as far as what's going on,
because you're following Forex, and obviously that's a world market more so than our equity markets, even though that's a world market as well. How is this holiday, Easter in particular? Friday is across the globe very slow as they come into, as in world markets, basically just dry across the board as well?
Yeah, I think so. I think it's going to be, so you're going to see, especially, we have obviously the geopolitical tensions are different than most holiday periods, if you will, so, but we can't remove that. That factor is there. It's not going away. Yeah. So I think that you will see a little bit more of a disparity as far as the open from the close on Thursday into Friday into Monday's trading or Sunday night's trading, depending on which market you're seeing, because of that little extended period. But I don't think it's going to be that significant. The reality is we know inflation is not going away. All these variables are already there. There's not going to be any shock that inflation's higher, or if oil is up a little bit more or whatever. You would need a radical move, like for oil to open up like $20 higher or $20 lower. That's not going to happen. So I think that you're going to see obviously a lot of erroneous spikes. That's why I said be cautious of, if you're not in the market, wait till Monday, because think about the algorithms. When you have the markets closed like this for this extended period, once they open, these algos are going to kick around all over the place. So all your weak stops on either side of the market are probably going to get run up a little bit, it's depending on the different markets.
Sure.
So it's just not a good trading environment. It's not about being indecisive. It's the mechanics of what's going on, and you're not going to find, I think, any real value buy or sell signals until after this weekend, so
open yourself up to a little bit of volatility from a light market, right, where it's really tough to tell. It's almost flipping a coin in terms of where it goes. Let's talk a little bit about crude if we can, man. Sure. We're back above $100, and in this market every time, just since Monday, I was talking about as I kicked off the program, $10 to the upside from Monday morning of 92.93. We all know gas prices, man, just record prices. What do you see happening in this crude market, Teddy?
I think that we've found a nice little support base. I think that we're going to start to inch higher. I don't think we're going to accelerate at a high rate like we have over the past couple of months. I think we're definitely kind of buffering into resistance, but I would say that we're going to make higher move highs and higher move lows. I think we're digesting this upper 90 to lower right around $100 as a baseline moving forward, because there's nothing that's going to come fundamentally to make us bearish this market. Even though the world, we have some of our oil partners, if you will, that are opening up their reserves, these numbers are insignificant. We're talking about speed bumps, so and even if they open up their supply chains, it's still a matter of getting it to us, so that's another issue as well, and then here's something I think you really have to think about is that, the Port of Shanghai went to complete shutdown at the end of March. We have a big supply chain issue that's about to hit us again over the next couple of months. It's also going to hit shipping, and also it's going to hit the energy costs. So I would think that over the next couple of months, that support base alone is going to drive the price of crude probably up to new levels. Like for us to see 140, 150 July 4th or the end of the summer, I think is very, very rational, without a doubt. And to be quite honest with you, if we don't see, I think about this, if these lockdowns start to go like they are going in China and continue to progress like they did 2 years ago or a year ago, we're looking at some major inflationary things that are definitely going to influence oil. So then $200 a barrel oil by the end of the year could be very rational.
Oof. That's a good one to end on, man. They'll be coming back next week to hear the take on that one, man. Teddy, we appreciate the conversation as always, man. We look forward to talking to you next week. Have a great long weekend. Have a great Easter, man.
Thanks, Tommy. You too. You guys have a good weekend.
You too, man. Thanks so much. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets catching a little bit of a bid right now. You got the S&Ps up 15 points, NASDAQ 100 up 107, Dow up 88. The only thing I'll say is when I got off the air yesterday, folks, at 10 in the morning, we basically had session highs, and it was a sell-off from there. The day is young, as our man Basil Chapman would say. Basil's coming up next, folks, and as I said, I'm looking forward to his outstanding webinar tonight. 90 minutes, folks, from 4 till 5:30 for opening call subscribers. You can get in there right now. Check it out on the front page of TFNN. You gain access to his newsletter for 30 days. You gain access to the 90-minute webinar tonight that will be archived on your members page. You also gain access, folks, to the number of archived webinars Basil does for his subscribers. And most Saturdays, Basil sends out about a 45-minute or hour-long video breaking down the market for subscribers. You'll get those as well for 30 days. Money-back guarantee. You can't go wrong. It'll be in Discord. You can watch with your phone. You can watch with your tablet. And you gain access to the Tiger's Den, folks. About 100 people in there right now live chatting about the market. Should be a great webinar tonight. 4 p.m. Eastern time, right after my dad's show. And please sign up right now. People love to wait, folks. They wait till the last minute. I do it myself. In this instance, it's going to be a little bit hard if you wait till 4 o'clock. So get over there right now. Basil's coming up in 5 minutes. By the time he's on the air, you'll be signed up. You'll be a subscriber. You can be checking out his opening call update this morning live. All right. Let's check around to some of the stocks that had earnings, and we'll kick it off with the banks. JP Morgan clawing back some of those losses. You're only down 2.2% right now. We jump over to Bank of America, down 1%. Bank of America is out next week, Monday. They're the only one among the other big stocks, big banks. Goldman, look at Goldman going positive this morning. Morgan Stanley going positive this morning as well. It's going to be interesting to see how they come out on Thursday. Citi, they're catching a bid, but down 0.8%. Let's jump to the FANG stocks as we wrap it up. You got Amazon basically flat right now. Apple shares, yeah, you're flat as well. You jump to Microsoft shares, up about 0.2%. We jump over to Tesla shares, basically flat as well. All right, folks, thanks so much for tuning in, starting your trading day with me. Stay tuned. We got our man Basil up next. We got our man Larry at 11. Fast market at 12. You heard our man Kevin Hincks. Thanks to him for jumping in when I got disconnected up early in the program. And then we got Steve, we got Dave, we got Tom O'Brien, my dad, and then we got Basil live at 4 o'clock, folks. Thanks so much, and stay tuned. Basil's up next. Have a great Wednesday, everybody.